Hello, everybody, and welcome. I'm Matt McCall. Thanks for joining me here today. Let's get this video set up. My hair's a mess. It is Friday, September 3rd, 2021. I appreciate you all tuning in. Getting ready for Labor Day weekend. I know a lot of people out there already. I was on the road yesterday driving back from Pennsylvania. And man, oh man, obviously with the floods too. So I hope everybody's safe after the storm in the Northeast. I never saw rain like that in my life. It was absolutely crazy. So hope everybody has a great weekend. Let's get into it. But today I want to talk about a couple things. First, I want to talk about the markets here. We continue to hit new highs. The NASDAQ, the S&P 500 continue to hit new highs, yet I still turn on the TV from time to time and to the financial media, and obviously I read stuff all the time. And I feel still like there's this negative, not a black cloud, but maybe a gray cloud hanging over the market that people just don't want to believe it. It's absolutely insane to me. So I still think you buy all pullbacks in stocks that you're looking at. And we're going to talk about 7 stocks today that for Labor Day, I think they'll be good conversation starters if you're around the barbecue and, grilling up or the pool or the shore, wherever you're going to be. So we'll talk about that in a minute. But overall, still love the markets. Bitcoin breaking out. I need to look here and see where it's at, but it's above 50,000 before I logged into the show here. And, we hit it 2 weeks ago, and then we've been consolidating up there, which is a really good sign. Ethereum broke above 4,000, multi-month high, which has really been outperforming Bitcoin earlier today. Right now it's at 39.72. And, Bitcoin's at 50,500 and change right now. It hit 51,000 a couple hours ago. So I'm loving cryptos, and I'm going to stick by my outlook here. I still think Bitcoin breaks above its all-time high around 65,000 by the end of the year. And then from here, obviously, that's about a 30% move. And I think Ethereum probably moves higher, or a bigger percentage, I should say. And I think some of the altcoins will see explosions. One that I recommended in an old newsletter, January 7th of 2020, I think it was, is Cardano. ADA is a symbol. And many of you have it, and many of you are up literally thousands and thousands of percent. It's right around $3 right now. Cardano ADA has been on one hell of a run. As a matter of fact, it's one of the few that hit an all-time high recently. A lot of them haven't. It hit $3.10. And so at $3.10, Cardano is a 100 bagger in what month is September? I just said so 8 in 20 months, 100 times your money. So when people tell you there's no such thing as a 100xer, there are all the time in stocks. I shouldn't say all the time. I take that back. Over time, over a 20-year time period, it's about 25% a year that you have to have that grow and then compound that it ends up becoming a 100 bagger. But, a lot of the big companies are 100 baggers. Even Monster Beverage, the best performer of the last 20 years in the S&P 500, MNST, 100 bagger. There's a lot of them out there that it is possible. But that happened in 20 months. Granted, it's not a stock, it's an altcoin. But still, to happen in 20 months, and this isn't some small thing you've never heard of, Cardano is the third largest token. It's got a market cap of $96 billion. Granted, Bitcoin's 950 million, Ethereum is 466, but it's the third largest. This is amazing to me. So again, don't click on everything that says your next 100x stock, because that's complete BS, because most of it's clickbait. But I will tell you, I do search for 100 extras, and I actually did that yesterday. I'm working on today some small caps that I'm going to share when I launch my new service later this month, early October when it comes out. But it's going to be I'm going to release one that I think, and I'm going through right now. And I own a couple myself, and obviously I don't share those, but I think there's a couple out there that I'm looking to find. So I'll release that hopefully soon. And again, we're getting closer every single day to my announcement. Could be next week, honestly. Could be next week. So before I get to your questions, I want to just talk real quick about, not real quick actually, this is the meat and potatoes, if you will, of today's show. The 7 stocks for Labor Day, and I even brought along some props. I have 2 props here I want to talk about that are part of the companies that we're recommending, or not recommending, that we're talking about. Again, no buy sell recommendations, just talking here, and go do it on your own. All right, so let's jump into it. I think this is the most fun. And so, unfortunately, a topic that is going to be at the barbecue this year for Labor Day is going to be COVID, unfortunately. So, I wanted to talk about a stock, and I talked about a vaccine stock that hasn't been approved yet a couple of weeks ago. And I don't know if anybody bought it. Did anybody buy Valneva, VALN? You can put down below if you bought it. If you did, congrats, because the stock went up bananas. Insane. It shot up from about $35 to nearly 60. It's at 47.5 today. This is a French company, a small cap company that is applying for FDA approval in the UK for use of its vaccine. It already has an order out for 100 million doses if it gets approved. So that one we had talked about already. The other one, this is a US-based company, and this is NVAX, Novavax. The stock's been really all over the place. It shot up above 300 in February, came back down around 130, so it lost over half its value. Back up to 247 today, down about 12 bucks. So it's down about 4.6%. This is a very, very, excuse me, interesting stock in that it hasn't been approved yet. Obviously, we know there's Johnson & Johnson, Moderna, and then Pfizer BioNTech here in the States. AstraZeneca has one. There's a Chinese company that's been approved overseas. Novavax, they just came out again just this week, and it's their third delay to their timeline. But they did say that they expect to ask for FDA approval in the fourth quarter. So obviously the fourth quarter starts next month in October. They expect to apply for approval in UK, United Kingdom, this quarter. So that's 1 month left. So that would be during September, as well as several other countries. It's an $18.4 billion company. The company came out this morning, I was reading, and said that they have a single booster, and that single booster dose at 6 months, it increased antibodies by more than fourfold versus the primary vaccination dose. They also said there's a sixfold increase in antibodies against the Delta variant, which obviously that's a big deal right now. They also found that if they co-administer their COVID vaccine with the influenza, the normal flu vaccine, that it was really strong against both viruses. So it could be pretty interesting that this is coming out during flu season. And if they put the two together, I was talking to somebody yesterday. We had a 2-year anniversary party for one of my fitness facilities. And the one girl there is she's a nurse. And she was saying that she thinks eventually you'll be getting the flu shot, and in the flu shot will be the COVID every year, just like a lot of people do now. So that's what she's thinking. So I'm not telling you that Novavax will get FDA approval, but everything's kind of pointing to it. But again, there's a huge risk there if it doesn't. And this year they're looking to still lose $8 a share because approval wouldn't be till near the end of the year. On revenue about $2 million. Last year they had revenue of $475 million. Next year, this is obviously based on approval for these analysts that they get these estimates. Earnings per share of $32.79. So huge spike up on revenue of 5.5 billion. So you can see where that's coming from if it gets approved. So that's one. Unfortunately, you'll probably be talking about COVID, obviously. So if somebody brings it up and they're going to say, "Well, I got the Pfizer, I got Johnson & Johnson, I got Moderna," you say, "Well, there's another company that might be out there soon," and you could sound very, very smart. I'm telling you all this stuff because I want you all to be the smartest people at your barbecue. All right, let's see. Next one. This is kind of funny. I don't know if you want to bring this one up at the barbecue, but it's a recent IPO, and I think I might have actually talked about it. If not, I wanted to. Company went public the first week of August. It's called the European Wax Center. EWCZ is the symbol of this, and it is what it sounds like. It's a wax. Women go there and get waxed. I mean, maybe men too. I don't know, but it's a smaller company. $725 million market cap. Last year it had sales of $103 million. This year, looking for $178 million. So really big growth, about 75% growth. By 2023, up to $222 million. What I like about this company, even though it's smaller, it's less than $1 billion market cap, it's profitable. It's estimated to make 24 cents per share this year, up to 60 cents in 2023. So more than doubling in 2 years. That's really nice growth. So this is one, again, I don't know how you bring this up in a conversation, but you never know. It may come up in conversation and say, "Hey, it's summertime. I got a hell of a company for you here. If you're looking for a small cap, European Wax Center, EWCZ." Well, another thing, I'm just looking at the things over here. My name's on something people keep saying. I'm not quite sure what it is, but sports. Obviously, it's sports. We have golf going on right now, the Tour Championship. A lot of other sports going on. It's getting close to the end of the baseball season. So we have college football, some today or some last night. Obviously, this weekend, a lot of big games. So sports will be on top of mind and probably in a lot of topics. I know it'll be in my topic because I love sports. So a stock, again, that you can share. Flutter. And the symbol, it trades overseas. So the symbol here is PDYPY. Paul Delta Yankee, Paul Yankee. It's about a $35 billion company. If people who follow me will probably recognize it. It has companies under its belt. It's grown through acquisitions. Paddy Power, that's why the symbol's what it is. Sky Bet, HRTV, which is the horse racing TV a lot of people can get. Poker Stars, many people have heard of that. Betfair, FanDuel. So FanDuel, there's DraftKings and there's FanDuel. They both have about pretty equal market share, but FanDuel is right there. But they don't get much play. Everybody talks about DraftKings because it's a separately private company or separately traded company, or it's the name of the company is DraftKings and it trades under DKNG. So people know it. But FanDuel's right there with it. It just happens to be part of Flutter, so you don't think about it being public, but it is public. They also have Fox Bet and a big deal with Fox. And Fox has the right to buy more of Flutter. So I think eventually Fox buys them. This is a company I really like. Top line growth, 10%, bottom line, 75%. This is a play on more sports gambling, expanding all throughout the country. And they're all over the place. They're in UK, they're in Australia. And the Fox deal, you have Poker Stars, and then you have the fantasy, FanDuel. I just had my fantasy football draft 2 days ago in Pennsylvania. I don't think I did too well, but it's always fun to get together with the guys. And so many people do it. It's crazy. It's our 25th year, believe it or not. 25 years ago, we did it by paper. That's how old I am and the league is. So Flutter, PDYPY, trades as an ADR, American Depository Receipt, based overseas, but a great way to play any type of online gambling, iGaming, fantasy. And then again, the deal with Fox. And it can only get bigger, in my opinion. And Fox obviously has a lot of sports, so there's a nice tie in there. So it could be a buy at some point for Fox. All right, what do we got here next? Let's take a look. We got a prop on this one. So I got a prop for you. So give me 1 second here. Pull it up. Here's my prop. Everybody can see that. Callaway. It's probably backwards. It looks backwards to me. So Callaway, it's a publicly traded company. And this is a golf ball for anybody to know what that is. I actually play Callaway balls, and I have Callaway clubs. I just got a few months ago, and I love them. The Big Bertha set. So Callaway, pretty interesting, huh? It's a $5.1 billion company. It had sales last year of $1.6 billion. This year, looking for $3.04 billion. In 2 years, up to $3.82. So price of sales, I mean, obviously, this is a pretty attractive company. It's trading at less than 1.5 price of sales. So that's nice for me. Last year, they did earnings of 67 cents. It's dipping a little this year to 40, then back up to 72 cents in 2023. They have the Callaway brand, obviously. That's their namesake. Strata, both golf brands. OGIO, which is OGIO, all capital letters. They make bags and stuff. I got a bag. I was at my friend's wedding years ago, and he gave me an OGIO bag. They're very high-end, nice bags. They also, and I didn't realize they own this, but they own the Travis Matthew apparel brand as well. And if you go like to Dick's Sporting Goods or whatever, and you look for like golf shirts, Travis Matthews are very nice looking. I didn't realize they owned it because I was looking for some last week. They're a little pricey, I guess. They look like a really good brand. I didn't buy any, but I'm going to buy one and check it out. But they own the Travis Matthew brand as well. And golf is just getting bigger and bigger and bigger. And maybe it's because I'm playing more this year, but I got to tell you, it's just so many people play, and it's just, I think it's a really nice trend. And again, COVID's not going anywhere. Hopefully we get back to normal, real normal. But it's a nice sport to get outside. More people moving to the suburbs, more people going to country clubs, playing golf. So I don't see the trend ending. I think it's a great trend. And stock has pulled back a little bit, Eli, E-L-Y. And I think it looks really nice down here. Man, it's pulled back from a high of around 37.5 down to 27.5 in the last few months. And I like the pullback. It's huge support at 20, 25, 26. We're right on it. So Callaway's one to keep an eye on as well. So again, that's something you talk about the barbecue. A lot of people like golf or play golf this weekend maybe. Another one that does well. What else do people talk about a lot? Housing. Buy my house, sell my house. Have you seen the housing market? It's going to blow up. It's a bubble. Well, I like Redfin, and many of you know that already. Symbol RDFN, obviously online. And I think I mentioned before, my condo's up for sale right now. So if anyone wants a beautiful condo with a great view of the water, I'm looking at a yacht out there right now, probably worth $10 million, if not more. Here in Baltimore, please let me know. I will sell it to you cheap, not cheap. Deal. I'll give you a deal. And I'm looking for other houses outside of Baltimore, and I'm using Redfin. I actually like it a little better than Zillow, to be honest with you. I was always a Zillow fan, but it's more aesthetically pleasing. So Redfin's a very interesting play because they pulled back. And I talked about Redfin, Zillow, Fathom, EXPI, Compass, Remax, all these companies, Open Door. They've all come down, and I really think that they're great buying opportunities down here. It's a $5.3 billion company. I did sales last year of $886 million. This year, looking for $1.8 million. That's more than double, folks. By 2023, $3 billion. And it's only trading at $5.3 billion valuation. That's a huge growth stock. Last year lost 23 cents. This year losing 94, near break even 2023. So you have that path to profitability. You have revenue growing annually next couple of years, 24.2%. You have the bottom line earnings growing about 81%, getting close to that break even. Down here, I think it's a true freaking bargain. So I really like Redfin down here. All right, let's see. Yeah, somebody just mentioned Callaway's got a mix of sales in Asia versus, yeah, they do. I think Callaway's, it's one of those stocks that I've watched, honestly. I don't know if I ever recommended a newsletter. I don't remember because I've recommended so many stocks over the last 20 years. I think they did. I don't know, but I remember like watching it back in the early 2000s, up at 25 bucks, came all the way down to 5, back up to the 30s, like I said, now 27 and a half. I love it down here. I really think it's a great opportunity. So we have Callaway, and again, I had the prop for Callaway. I play Callaway balls, so if anyone wants to give me a present, I play Callaway balls, and I lose a lot because I'm not that good. The next one I have a prop for as well, and again, this is something you'll see at a lot of barbecues this weekend. And it's funny, when I lived in Nashville, I always made fun of people who had this brand of cup. You probably know this by now, and coolers, if you will. I just thought they were so cheesy. But last weekend, I was at the PGA golf tournament, as many of you know, and I got some a swag bag, if you will, with shirts and cups and stuff. And there was 2 Yetis in there. So as you can see, see it as BMW Championship. So I got my Yeti here, and I got to tell you, I really, really like it. I mean, it's heavy, it's sturdy. It's got this. I don't like drinking out of metal, but it has this like little thing here. You can see. I mean, so you're drinking out of plastic, and I think this is pretty damn expensive. Like I said, it was a gift, so I don't know, but I like it. So that being said, Yeti stock's been on fire, as if anybody who owns it knows. And this is a stock that went public in 2018. And from the low in 2018, this stock is a 7-bagger. 7-bagger. It makes coolers, for Pete's sake, I should say. So people love this stuff. And it's like a cult following. $8.7 billion company. Last year, they did sales $1.09 billion, 1.4 this year, 1.86 in 2023. So not huge growth on the top line. However, I love the bottom line growth. $1.87 they made last year per share. That's big. That's big time. $2.49 this year. By 2023, $3.53 a share they're expected to make. That's big bottom line growth. That means margins are increasing. Maybe it's a mix of products that they're selling. Boy, I like it, and the chart's just fantastic. I don't see it ending anytime soon. It's a bit of a cult stock, so I like it. And then the last one, number 7. You know, when you go to barbecue, people talk about working out. They want to finally get in shape. They've been getting in shape. So a stock that went public recently via a SPAC, or sorry, I take that back. It filed to go public through a SPAC last year. That deal fell through this year. They went public via a traditional IPO, and that's F45 Training Holdings. Symbol's FXLV. Can anybody tell me why that symbol is FXLV? I figured out that I wasn't quite sure. Then I was like, it clicked. Anybody tell me why the symbol for F45 is FXLV? I'll give you a prize if you do. Probably not, but pretend I will. So story about this one. This is a company based out of Australia. And before I moved to Baltimore about 2.5 years ago, so about 3 years ago, I bought the rights for Baltimore metropolitan area to open as many F-45s as I wanted in the Baltimore metropolitan area. There was none here. Roman numerals. Yep, smart person there. I can't see the first name. Timmy boy, smart guy. So because XLV means 45 in Roman numerals. Okay, excellent. So I had the rights, and then buying a franchise is tough because you have to do a lot. You have to meet certain requirements, and it was just too much. So ended up selling it back to the company, and then I opened obviously Pilates Studios. So, and we're expanding that franchise. We're franchising that out, and I think it's better that way for me. All that being said, I love the workout. It's a 45-minute workout that you go around twice on these circuits. You do each one for like maybe 45 seconds or so. You come out of there, you feel pumped, you're sweating like crazy, great cardio, great muscle workout. It's a great all-around body health workout. There's one now here in Baltimore. It's kind of crazy. They actually put it in the location that I was scouting out. So I don't know how they found that out, but they put it in the same location I was going to use. And it's successful, so I'm happy for them. But this company is really interesting, and you take a look at the numbers. It's a smaller company, $1.3 billion. Last year, they did 82 million in sales. This year, 133. By 2023, 326 million. So huge growth. They lost 45. They're looking to lose 45 cents a share this year, but next year, profitable to the tune of 74 cents a share, up to $1 in 2023. So you're looking at a company that at $1, if it's growing like that and it meets these numbers, you have revenue growing at 31.3% annually, you have earnings growing at 57.4% annually. So it should be trading at a huge multiple. At $1 per share in 2023, if that's what it hits, it should be trading at 50 times earnings, in my opinion. So that puts it at $50. The stock right now trades at $14.30. So I think there's huge upside for that. So something to definitely keep an eye on. And again, those are our 7 stocks. You can at least use one of those over some good conversation this week at the barbecue. From F45, a workout place, to Yetis. As we got here, look at this thing. This thing is amazing. We got Yetis, we got Redfin, housing, Callaway, golf, Flutter, if you want to talk sports and gambling, European Wax Center. I don't know how that comes up, but it could potentially come up. And Novavax, if you have to talk about COVID. So those are some great ideas for you. Again, no buy-sell recommendations, but put them in your watch list, do some extra research on them. Some really interesting plays that I came up for you here. Now, let's get into some of your questions before I wrap it up for the week. All right, let's see what we got here. Let's go just going through the list over here on the right-hand side. And again, if I skip your stock, it's because I've talked about it in the last 2 weeks. I'm not going to talk about the same stocks for the next, all the time. So I'm going to skip through them. And I'm not being rude, but I just don't want to talk about the same stocks all the time. Let's see here. Who's got questions? I don't think I've talked about Elms in a while. Elms was a SPAC, Electric Last Mile Solutions. The symbol is ELMS. It's like most SPACs, it's struggling. It's around $8.37. I will say the SPACs have really bounced back in the last couple of weeks. So you're seeing a bit of a bounce back. What I think you want to do for these SPACs, it's about a $1 billion company, is look and see how they react in the next month or so. Because these could be what you call dead cat bounces, or just bounces because it's just fallen so quickly. If there is follow through, it's definitely something to keep an eye on. A company like Electric Last Mile Solutions, this year's expected to have revenue about $17.5 million and lose about 78 cents a share. Next year, revenue is expected to explode to $525 million, losing 54 cents a share. By 2023, up to $1 billion. I just told you it's a $1 billion market cap. Again, if it hits this number, it probably trades 5 times that. Say earnings 78 cents a share in 2023. Again, if it trades at 10 times earnings, it's $7.80. It's at $8.40 now. It's obviously going to trade more than 10 times earnings. It could trade at 50 times earnings again if it's growing this fast. So you're putting a stock that's about a 4.5x from here. But again, it has to hit these numbers. And a lot of times only 1 or 2 analysts follow. There's 5 analysts that follow this and put their estimates out. And but they range, they definitely ranged in estimates. So huge risk, but it's a company that's obviously in transportation. It does last mile delivery and stuff. It's urban delivery. They anticipate there'll be the first Class 1 commercial electric vehicle in the U.S. market. Huge upside, and I like what they're doing, and I think there's a huge need for it. But again, there's big risk with that. Just so you know, I just want you all to know that there is a big risk on that. Let's see, I don't know this one, so I'm going to take a look at it first before I mention it. Yeah, Face Drive, I've never heard of it. FDVRF started trading in January at $11, went up to 40. It's down to $1.92, down to 30% today. I don't know it, but that's not my cup of tea, if you will. What else do we have here? SID, somebody asked about. This is a steel company, and a lot of the material stocks have had a nice run the last 12 months. SID ran from a low in 2020, down around $1, up to above $10 in May. So that was a 10-bagger in literally a year. Back down to 665. I'm kind of torn. I don't have big exposure to steel and some of the let's call them industrial metals right now, and maybe I should have more. But it's something I definitely would keep an eye on. It gets most of its revenue from Asia. It's a $9.16 billion company, so it's a decent size. You look at sales, and it's all over the place. Let's go back to 2016. It did about $4.9 billion in sales. 2017, 5.79. 2018, 6.32. 2019, 6.45. Last year fell to 5.89. This year they're saying 10.8 billion, which obviously for a company I just told you trades at less than 1 time sales for this year, but then dropping next year 9.4 billion, then 8.43 billion the year after that. So again, it's very inconsistent when it comes to steel. It's based on the global economy, demand. Not a bad play in a pullback if you think the global economy is going to continue, but I'm not jumping for joy, but it's not bad. I'm not saying it's bad either. Somebody's asked about Yext. Yext had terrible numbers in my opinion. It continued to fall. I don't like Yext here. I think it's a stock that I would look to dump on any type of bounce if you could find one. Somebody's asked about Lemonade, LMND. So Lemonade is it was a pretty big IPO back 2020, and they're trying to really change the insurance industry. And Lemonade is a stock that I find interesting. It's about a $4.7 billion stock, but they use artificial intelligence, AI, in their platform for insurance. So it's really the new way, next gen, if you will, of insurance. So I like that. Again, $4.7 billion company. Last year though, it only did 94 million in sales. This year, looking for 124, then 204, then 306. So we're seeing, obviously nice top line growth. Still losing a boatload of money. Last year, it lost 363 a share. This year, looking for 381. Next 2 years, losing between 360 and 380 a share. So big risk because I don't see any type of path of profitability anytime soon. Great story, great concept. I like what the company's doing, but it's a little pricey, even though it's fallen from 180 down to 76 where it is. So again, I'm not saying it's not going to be successful. Just where it is right now, it doesn't get me overly excited. Somebody asking about Big 5 Sports, BGFB, if it's a short squeeze. I don't think it's short squeeze. This is just a sector that's been doing well. We've talked about Dick's a lot, and I talked about how that stock. Look at it this year. It's up almost 3x this year alone. Since January. So I like the sporting goods. I don't see that ending. And that's, you look at, I talked about Callaway just a minute ago. That's where you buy it. Sporting goods stores are doing well. So I don't think it's a short squeeze. I literally just think it's actually doing well. What else here? Let's see. SMG, Scott's Miracle-Gro. That's maybe one you want to talk about this week too. Like, oh man, your grass looks good. Oh yeah, use a lot of Scott's Miracle-Gro. This stock was on a tear for many years, for 2 decades, really. This is a stock that's been huge since the turn of the century. Sorry, not the century. Yeah, turn of the decade. Sorry, no, century. Going back to 2000, it was a teenager, went up to $250 a share, back down to 161. So it's taken a bit of a hit. Scott's Miracle-Gro, most people who own houses know exactly what it is. It's a $9 billion company. They have Miracle Grow, Roundup, Ortho, Tomcat, Scott's. So a lot of names that you know if you have a yard, if you ever had a yard. And revenue last year, 4.13 billion. This year, looking for 4.89. Looking ahead 2 years, revenue up to about 5.2 billion in 2023. So it's not overly expensive. It trades with a forward P ratio of 18, forward price of sales 1.8. Your earnings per share last year 7.24. This year looking for 9.21. Dipping a little bit next year, up to about $10 in 2023. So I think it's nice. I think this pullback looks really darn good, to be honest with you. So that's a nice looking play. If you have it, hold on, but that's one maybe consider here as well. All right, we're coming up. We just passed the 30-minute mark. I'm trying to keep them here. Let's look at one more. The last one I came across was Spotify. S-P-O-T. Spotify, obviously, music. A lot of people use it. I use it. But it's been pulling back quite a bit. It went public back in 2018, around $150 a share. Ran up to the high 300s, back down to 200. It's at 250 right now. It's had a bit of a bounce here in the last little bit. I don't have much of an opinion one way or the other. It's just under $48 billion company. It's based over in Sweden. I love what they do. They have a great product. $9 billion in sales last year. This year, looking for 11.3, up to nearly $16 billion in 2023. The company is losing money. Looks for a path to profitability of 88 cents a share in 2023. So it'll be the first year they actually make money. Yeah, I don't mind it. Again, not overly excited about it, but I don't mind it, put it that way. All right, so I'm going to wrap this up here, and I hope somebody has a great weekend. And everybody's saying thank you. I really, that means up so much to me. People are saying Scott's to play in marijuana growth. It's a stretch. I mean, what Scott's is sold for is much more people moving to the burbs. I mean, there's a cannabis tie-in, but the percentage of sales that go to people growing weed is not that high. Trust me. People like to use it as a cool story, but I don't think it is. So again, thank you so much. I appreciate everybody. And again, I know I've said this a few times, but I think next week you're going to get the announcement finally, and I cannot wait. I am so ready. I'm working on so many cool things behind the scenes right now. I'm about to shut this down and go do some work, look at charts. I'm working on writing, potentially the first issue and working on stuff for that. I have so many cool things in the wheelhouse that's coming out, and I cannot wait. But I hope, first and foremost, we're here to have fun, enjoy life. Make money, obviously, but be educated along the way too. So I'm really going to focus on the next decade to really educate you all. I'm really going to, because I want you to be able to do it on your own. And I think it's very, very possible for everybody. So that's what we're here for. So we're going to grow this community, be freaking huge. I can't wait. But again, have a safe, fun weekend. Should have some drinks, whatever you do, cook some barbecue, go swimming. But again, spread the love, and you have 7 cool stocks to talk about this weekend. Thank you so much. By my heart, summer's wrapping up, but we got some great stuff coming forward in the fall. Football and my new service launching in the next couple of weeks. Thank you so much. Have a wonderful weekend. We'll be back on Monday.